We started in January 1st of 1999, so about 9.5 years ago. We started with $1 million under management, so our assets growth rate, we're a little over 100 million today, so we've grown our assets 100-fold in 9 years. We've compounded net to our investors about 10% a year, and over that time period, the S&P 500 has been about 3% a year. Well, buy low, sell high, very simply, but usually we're looking in two different areas for stocks. One is because we manage a relatively small pool of capital, we can look at the 5,000 stocks in the U.S. stock market that have no analyst coverage. So that's where the bigger bargains tend to be found. And then secondly, among well-known stocks, we look for companies that are out of favor or where they're in sectors that are out of favor. So for example, today, the retail sector is very out of favor because of weak consumer spending, concerns about future spending. So we found actually quite a few bargains among U.S. retailers, well-known companies like Target or Barnes & Noble, Sears. Well, this is a business where, you know, we take hard looks at a lot of stocks, and we have pretty good filters. So by the time we're taking a hard look at something, it's if we're doing our job right, it's cheap. And so there have been many stocks we've looked at that we never invested in that have gone up many, many times. And so I could tell you about dozens of those. We've made a few mistakes where we've just misanalyzed a company, missed something, and lost a lot of money, sold, and that was it. Mostly, though, we tend to be early. We buy a stock that's going down, it's out of favor. We buy it because we think it's cheap, and maybe it's a 50-cent dollar, and the next thing you know, it's a 30-cent dollar, and we've lost 40% of our money. And usually, if we're patient and our analysis is correct, we eventually will make good money. But I wish I could be more clever in buying stocks right at the bottom. Often it happens that I buy too early or a little too late, and I don't make as much profit as I could have made by buying at the bottom. Our biggest successes, you know, on the stock we've made the most money on a dollar basis is McDonald's, which we owned for many years, and that embodies the ideal for us, which is find a great business with a global franchise, incredibly strong brand, strong cash flow, strong balance sheet, but that was mismanaged and fell very out of favor. The stock got very cheap. But when it got good management in place and the business began to turn, we were able to hold that stock for 5 years, 6 years before we sold it fairly recently, and made many times our money over many, many years. And that's the ideal. That's what we look for. I thought it was tremendous. You know, I wasn't sure what to expect. You know, I've been on vacation in Mexico, but never been to Mexico City, and I wasn't sure whether the attendance would be very good because there's not much of a, you know, Francisco and Alejandro told me there's not much of a value investing community or even an investing community in general in Mexico. So I was very pleased with the turnout. I thought it was tremendous for a first-time Congress in a country we've never done this before. So I think it's a real credit to Francisco and Alejandro about their connections and networks and credibility and putting together. The other thing I was very impressed by was the venue is beautiful. It was really, really well done. Something, you know, we would be proud of to have done in the United States as part of our Value Investing Congress. So I look forward to doing this again in the future.